The main legislative reform underpinning the political agenda of Donald J. Trump's presidency, the repeal and replacement of Obamacare, imploded on Friday, shattering the administration's ambitions and casting doubt on its ability to deliver on its promise to slash taxes. Rather than suffer a humiliating loss at the hands of his own party, House Speaker Paul D. Ryan dramatically pulled the legislation to replace Obamacare minutes before the House of Representatives was to vote on it. Withdrawing the Republican proposal to replace the Affordable Care Act was a major political defeat for the swashbuckling Mr. Trump. It is expected to delay his promise to enact tax cut legislation, as the tax reduction was predicated on spending cuts dependent on the repeal of Obamacare. With the Medicaid cutbacks lost and Mr. Ryan committed to supporting a tax cut only if it does not increase the federal budget deficit, the House Speaker said on Friday that tax reform, while not impossible, will be more difficult to implement. The collateral damage on Friday did not extend to the stock market. The Standard & Poor's 500 closed Friday at 2343.98, down by just a fraction for the day and by 1.4% for the week. Despite the stunning turn of events, the S&P 500 held on to about a 10% gain experienced in the 17 weeks since the election. Major benchmarks of corporate America's value are still hovering near the recently achieved all-time high, largely because, for the past few months, the economy has repeatedly surprised investors with better-than-expected data on consumer income and spending and leading economic indicators. Stock prices have been fairly stable despite whiplash-inducing economic and political news, and the strength of the economy could continue to surprise on the upside and propel stock prices to new heights. No one can reliably predict the stock market's next nosedive, however, and it's wise in times like these to brace yourself for a drop.